Welcome to Talk Tickers. Today, we're digging into a really interesting one, Flux Power's Q4 earnings call. Now, this was a wild ride, a massive stock surge, followed by a pretty surprising reversal after hours. So let's break down what actually happened.
All right, let's set the stage here. On September 16th, right before the earnings call, the market was just on fire for this stock. I mean, look at that number. It shot up over 52% in a single day. That's some serious enthusiasm right there.
But then, the call happens, and the story completely flips. The stock pulls back more than 11% in after-hours trading. So, the big question we're all asking is, what gives? Why the huge disconnect between the market's initial reaction and what came after?
Okay, so to figure this out, let's first look at what got everyone so excited in the first place, and that's the headline numbers. Because honestly, they looked really good.
Yeah, check this out. Flux Power absolutely beat expectations on both the top and bottom lines. They reported a loss of 7 cents a share, which sounds bad, but it was actually much better than what analysts were expecting. And on the top line, revenue came in at $16.7 million. That's a solid 25% jump from last year. So, a clear beat all around. But here's the number that really lit a fire under the stock. It's all about profitability. Their gross margin, wow, it expanded by a massive 760 basis points compared to last year. That drove gross profit up 61%. I mean, that's not just an improvement, that's a huge leap forward. And that's the kind of thing that makes Wall Street sit up and take notice.
So you've got to be asking, how in the world did they pull that off? Well, the new CEO came in and laid out a very clear 5-part strategy, and it's all about getting to sustainable, profitable operations.
And this quote from the CEO, Krishnavanka, really gets to the heart of it. They're trying to shift from just being a company that sells batteries to one that sells intelligent energy solutions. Think about it. It's about moving beyond the hardware and creating a whole connected ecosystem. That's the big picture here.
And here it is, the new playbook in 5 steps. You can see it's a mix of things, focusing on profitable growth, getting more efficient, but also really changing how they sell. They're pushing this solution selling idea, and this is key, adding value with software that could bring in recurring revenue. It's a smart balance between cutting costs and finding new ways to grow.
And it's not just talk either. We're already seeing some real proof points. They just landed a couple of big orders from major airlines. That's a huge market for them. And notice that second one, they're bundling their new software right in with the deal. Plus, they got a new patent which helps protect their technology. So the strategy is already starting to bear fruit.
Okay, but here's where things get a little more complicated. Management's guidance was kind of two-sided. For the near term, they're being pretty cautious. They're pointing to things like tariffs and just general economic uncertainty. But they're also saying they're really optimistic about the second half of their fiscal year, pointing to a strong sales pipeline and the new cash they just raised.
Which brings us back to our big question. If the quarter was so good, why did the stock drop after hours? It seems pretty clear that investors were looking past those great headline numbers and were reading between the lines, and they found a few things that gave them pause.
And here's probably the number one reason. On the very same day, the company announced they were raising $5 million in capital. Now, on one hand, that's good. It strengthens their balance sheet. But on the other hand, it means potential dilution for the people who already own the stock. And after a massive 50% run-up in one day, the last thing investors want to hear is that their slice of the pie might be getting smaller.
The analyst Q&A session also gave us some clues. The questions really honed in on whether they can actually execute on this new strategy. Specifically, they were asking about the software platform SkyEMS 2.0. It's one thing to have a great plan, it's another to actually make it work. This is the show me part of the story.
And management's answer was pretty telling. They stressed that this software is a core part of their whole new strategy. They're trying to bundle it with every new sale. And, get this, they see a huge opportunity to go back and sell it to the 28,000 plus units they already have out in the field. That's a massive installed base. The potential for recurring revenue is definitely there. But again, it all comes down to execution.
All right, so with all that in mind, what do we need to watch for going forward? What are the key things that will tell us if this turnaround story is for real?
Well, I think it boils down to 4 main things. First, can they keep those gross margins high? That's priority number 1. Second, will customers actually buy and use the new software? We need to see real adoption there. Third, what's the balance sheet going to look like? Do they have enough cash? And finally, you got to keep an eye on the bigger picture. Things like lithium prices and government tariffs. All of that could have a big impact.
Okay, so that brings us to our take. What are we expecting from Flux Power heading into their next earnings call?
Look, based on what management told us, we're expecting a pretty soft first quarter. Those macro headwinds are real, so revenue might dip a little. But the real test, for us, is whether that impressive gross margin can hold up. If they can keep it above 30%, that would be a huge win and would really set the stage for a strong comeback in the second half of the year.
So, for our official rating, we're calling it a market perform. Here's why. The improvements they've made operationally are fantastic, and the new strategy makes a lot of sense. That's the good news. But you have to balance that against the risk that they can't pull it off, the shaky economy, and the fact that the stock has already run up, over 80% in the last month alone. The market is priced in a lot of good news already. Now it wants to see the proof. It wants to see sustained profitability before it's willing to push this stock much higher.
And of course, just a reminder, this is not financial advice.